Hello, everybody. Today, I want to talk about a very unique situation here in the futures market, which is the macro trader trap in the higher time frames. Now, let's have a look at a couple of slides and as well at a couple of charts. Now, well, this is a unique situation, but the market is in a situation of conflict in the higher time frames. So here I'm referring to monthly but mainly quarterly charts. We'll see later why. This means that a lot of traders and investors get caught on the wrong foot. Well, this is basically what happens in a trader trap. And I really like to trade trader trap because it gives you great opportunities basically on both sides of the market, right? Now, a trader trap is always a great opportunity in all time frames, even if the trap is on a quarterly chart, for example. If the quarterly chart starts to develop a very strong momentum move, or this could be a big monthly or quarterly green or red bar, a big bar on a higher time frame, well, it means that there's a lot of trading opportunities in lower time frames, right? However, it's only a great opportunity, right? A trader trap, because most actors actually fall into this trap. Well, it's only a great opportunity if you approach the market with an open mind and if you're actually obviously not trapped. So how can you capitalize on the trap? Not fall trap to fundamentals reasoning, right? But just to follow the patterns on the chart and trade what you see. Now let's have a quick look now at the US dollar index, because it has actually generated a failure signal, a short failure signal. Now, a quick look through the other asset classes, we'll actually see that they're in a long-term bull already for quite some time. This is the US dollar index future, the DX, right? Now here on the quarterly chart, well, we got this this short entry signal. That's an S1 pattern, basically, well, the stock was up here at this wick high. This wick is the Corona panic spike bar. That's March 2020. So this is a very important level, not only looking at the chart, but knowing as well, what happened there. And March 2020 is marks a very important price level on many of the price charts and the capital markets. Now this flashed a short signal right on the quarterly chart, and a failure to follow through here on the downside. Well, it's actually a countertrend signal. That was a short signal. So now we're actually looking for long here in the dollar, right? Meaning that the dollar should get stronger over the next couple of months and quarters. Now, now the target is locked in for this failure signal, which is the start of this down move here, just prior to the pattern. And this is the target, right? So we could actually see now a swift move to this level up here from around 100 to 130. Well, that's kind of 30%, right? That's a big move. And I anticipate this to come in quite quickly. Let's have a look at the US equities. So that's the ES future, the Standard of Poor's. Well, here again, we see very dominant, right? The spike bar, that's March 2020, the Corona panic high. So here the price low, and that as well gave us an entry signal here into US equities, and that's the S&P, just as an example, right? So with the strengthening of the dollar, well, again here we've got a pullback, right? And this pullback is basically, it's overdue, right? We're only coming back here on the quarterly chart to the 8. And there's more potential to the downside, coming to the 21 or even lower. Now, this is silver and gold. Silver provided, again, we have the same signal, right? We got an entry signal in March 2020. That was the long signal. Well, that was a great long entry. We can see here on the quarterly chart, right? That was kind of a very dominant low at around $12. And it more than tripled within just a couple of months. Well, now we've got another pattern, and this is a quarterly overall pattern as well. So basically, all asset classes are in a bullish long-term trends, and a strengthening of the dollar basically runs counter long-term commodity trends. So it's interesting to see actually what's going to happen if the US dollar index goes higher if the dollar gains in value, especially if this happens in a swift way. Gold, because gold is already at a critical level here, right? So there are a lot of long traders or investors who have actually put their stop at this rounded bottom, right? With gold, well, the interesting with gold is gold was front running this whole thing. We got an entry signal in system 2 here in July 2019. So before we had anything to do with the pandemic, and the pandemic didn't do a lot of damage here to the gold chart. So again, here at a critical level, and should the dollar move higher, well, we've got a tendency with commodities that prices goes down, and with this critical level, well, that's a stop run opportunity, right? And it could go back down to basically the entry level, right? We found here back in 2019. Let's have a look at energies. That's crude oil, and that's gasoline. Again, here we got a great signal. Well, this is the Corona panic low. A little bit later, here in the beginning 2021, we got a signal based on an S1. Now this is basically overdone here, right? It has gone way up, broken the 200 moving average. Here on the quarterly, the bulls are pushing hard against prior price resistance, too far away from the moving averages. Well, target achieved, right? Overachieved, basically. So again, this is at the critical level and due to a pullback, right? Gasoline had a great run too, similar to crude. Just it already made a new high, right, compared to the crude chart. So well overdone, and we might as well see here a stronger pullback in the overall long-term trend. The overall long-term trend is not is still valid, right? So with a spike in the US dollar index, a strengthening of the dollar, we could actually see a hard fall, right? A hard pullback within this overall uptrend in energies. Now, this is interest rates. That's a 5-year US T-note. As well, here we see March 2020, an important date, right? From here on, well, we saw a dropping of the future, meaning that the yields go up, right? Many people are screaming now that the yields might go up further and further up. Well, we are overextended. We are sitting here at an important support level, and this is still in a very strong overall uptrend. So we might actually see here a snap back, right? At the strengthening of the dollar, where we might see a snap back, because dollar strength means capital is flowing into the US, right? And a lot of foreign capital goes into government bonds, right? And here the 5-year T-note as an example. Now let's have a look at the opportunities we might get. So obviously one of the opportunities is the dollar index itself, the DX future. If we get a series of green bars, well, intermixed with a red bar here and there, as we've seen here, just in the opposite, right? Intermixed with a couple of green bars. So we see a strong bullish up move, a one-leg move, basically, towards this level. Well, this offers great opportunities on lower time frames, and this can go down to the minute chart, right? Now, gold at a critical level, where we could see a big rush to basically the next level of support, which is the 1,400 level and the 200 moving average. The interest rate futures, well, they're all overextended to the bottom in an overall uptrend. So we might get surprised and get a swift bullish up move. Back into, maybe even making a new high. And the energies here, for example, gasoline, where we might, after this huge up move, we had tremendous opportunities. I mean, with this bullish quarterly one-leg move, basically, right? We had a lot of opportunities trading that in lower time frames. And we might get a series of red bars now, a swift move back to $2 or even $1. So that's a macro trap, and looking forward how that develops. We might get a red bar here and there, right? So I don't say this is going there immediately, but interesting times, and I haven't seen that before like that. Thank you.